Finding your trading self. Why trading? It is so important for a moment to think about why you want to trade. Of course, we all want to make money, but beyond that, how can it fit into your life? Trading works best when it works in confluence with who you are and what you're about. This specifically relates to your personality, and that's why it's really important to have a little bit of introspection, okay? This is because you're going to learn all about trading strategies. There's a wide range of trading strategies that are possible, but the reality of it is that if you come across a trader that has a trading strategy that they absolutely love and it just does not fit with your personality and your lifestyle, it really doesn't matter because it's not going to work for you. So, as you're going through these videos and as you're going through your trading journey, it's really important to look for trading styles that are going to align with your personality. Now, what does that mean exactly? Well, it does have a little bit to do with your availability, of course, but more on a personal level, how anxious are you? How calm are you? Do you want to look for something that is going to be high risk and is going to be more exciting? Or are you looking for that slow and steady income generation? We have traders that are very strong directional traders and they like putting on a lot of risk and they like getting in the market and they want to see a big move in one direction or another. And then they want to get out in a few days. There are some traders who absolutely hate that because it's too much risk for them. They don't want to try to time the market. There are traders that say, hey, you know what? I don't really care if it goes up or down. I just want some premium decay. So, when you're thinking about yourself and what kinds of activities you enjoy and what kind of trading you enjoy, it's really important that you work on gravitating towards something that is going to work for you. Now, a great example of this is in the beginning when I first started trading. I was trying to make a daily income, and that's because I was trying to replace the income that I did not have anymore when I quit my job, right? And so I had it in my mind that I was going to day trade. Well, the fact of the matter is that when you have a newborn and you're trying to day trade, it is a nightmare, okay? Babies need you when they need you. You can't say, oh, I'm so sorry, but the ticks have picked up. Can you please just wait? Hold off on that crying while I close my trade. Doesn't work, right? So that is why I gravitated towards swing trading. Now, what I found out, of course, is that, you don't need to get in and get out in the same day to work on creating that daily income. Um, with swing trading, you're going to have moments in time where there's a lot of action, and then you're going to have moments in time where there's not as much action. But in the end, it should even out. There's going to be some peaks and valleys, but there's no reason to force yourself to day trade if that's not going to fit your lifestyle and your personality. So, when you think about your personal style, you might say, well, I have no idea, Danielle. I don't have a personal style. I'm just beginning to trade and I'm trying to follow this person. I'm trying to follow that person. I don't know what that looks like. That is completely and totally okay. So, what I would recommend doing is pay attention to the kind of style they have. What are the time frames that they're using? Are they getting into trades and getting out in 5 minutes? Are they getting into trades and getting out overnight? Are they getting in and getting out in 3 weeks? Are they looking to time a perfect entry, or are they a little bit more calm about it and don't want it to be as precise as maybe you could be, but they're just a little bit more low key? Think about these actions that traders are taking when you're learning from them and think about how that sounds to you. Um, when you talk about personality and when you talk about your personal style, you're also going to have risk tolerance that's wrapped up in that because if you're more along the lines of cautious, you are likely going to be more interested in risking less. Okay. Now, for me, it's funny because I actually I risked a lot more percentage wise when I first started trading. And that's actually the opposite of what you should do. But, when I first started trading, I had a really small account. So didn't really have too much of a choice. I was risking 5 to 10% of my account per trade. And of course, that is what you have to do if you want to aggressively grow an account. As the years have gone by and trading with a larger account now, I actually I risk less of my account per trade because I'm more risk averse and because as over time my style has grown as I have grown. So, just a few examples to keep in mind. And ultimately, the only person who can decide this is you. So, generally, when we're looking at risk, we will talk about risk on a per trade basis and then an overall account basis as well. So, if you're just starting, we do recommend the least amount of risk possible, which is usually about 0.5% per trade. Now, I do about, 2.5% of my account per trade. But, you can't have 40 trades on, right? So you have to take into account how much you're risking per trade. And then you also want to combine the number of trades that you have on as well, because you don't want to be risking, I would say personally more than 20%. But for those people who are very aggressive, especially when the market's really on fire, people will go upwards into 30, 40, hopefully not more than 50%, because you always have to know that there is a likelihood that everything can go to zero. So anytime you're putting risk on, especially overnight, just keep in mind, think to yourself, what if every trade I had on went to zero? What would happen? That's where you will know, that's where you will find your threshold. So, in general, starting smaller and earning the right to trade bigger is going to be the best way to approach this. Again, most people do it the opposite way. They want to start off big and then they, over time, become a little bit more cautious. But the best way to do this is really to earn the right to trade bigger. That means taking risks, taking appropriate risks. And then once you start getting better and getting good and you get through that learning curve, then you're able to, feel more comfortable risking more. Of course, all of this is going to depend on your available capital as well. So you can't make these decisions in a vacuum, right? So I do think it's funny that I risked so much more when I had so much less available capital and less experience, but hey, that's how I did it. I did come through the other side of that, which is amazing, but not everyone does. So that's why we caution people to generally start low and move upwards, send the pendulum up the other direction, risking more as you learn more and as you have more available capital. This rule is the same even if you're coming in here and you're saying, hey, you know what? I just got a huge inheritance. I have all kinds of money. Don't worry about me. I'm going to risk 10, 20, 30%. Honestly, it's just as easy to lose a large sum of money as it is to lose a small sum of money because of the way that options work, because of the number of contracts you can do. And that's why it's important not to look at risk as a dollar amount, but as a percentage of your account per trade and overall. So, of course, this leads to goals, right? Well, what does all this mean for our goals? How do we achieve our goals? What kind of risks do we put on? What does our personality mean for what our growth can look like? Obviously, if you're risking less and you're doing more nice and easy trades, that means that your goals are going to be lower than someone who's throwing on a lot of aggressive directional risk. Now, there's absolutely nothing wrong with either one of these choices. It just means that you shouldn't ever compare yourself to other people. You should compare yourself against yourself and the goals that you are trying to achieve. The number one goal at the very beginning is just to learn. It's to limit your losses as much as you can because you want to live to trade another day and you want to get through that learning curve so you can get through the other side. And that is the very first goal in the very beginning. After that, then you can start to think about, okay, things are going well for me. What is it that I want to do? Do I want to grow my account? Do I want to, take some monthly income? Do I want to save for a down payment on a house? What is it that is your goal? Of course, you can start off with that idea in your mind from the very beginning, but just know you have to get through the learning curve first. In conclusion, trading options for me is one of my favorite ways to participate in the stock market. I love the leverage and the action that trading provides. It has taken time for me to find out what works for me. And it's crazy because even throughout, the past 10 years I've been doing this, my style has changed a lot over time. I mean, there are some common themes, of course, but things change as I grow and as I change, and it should be the same way for you as well. So just focus on these core driving principles throughout your options education, and that is when you'll have the best shot at identifying what works best for you. So, thank you for joining me for this segment. During the next segment, we will be discussing understanding options, the definition, importance, and real world applications. I look forward to seeing you there.